Hi everyone, this is Rick Odell from Odell Capital Management with an educational economic update for August 2016. In this month's video, we'll talk about some of the events that influenced markets in July and give you some insight into what they could mean for you as an investor. Markets had a lot to think about this past month. A British exit, interest rates, and earnings season all affected market movements last month. After dropping sharply at the end of June following Britain's vote to leave the European Union, markets regained steam and rallied for 4 straight weeks, pushing the S&P 500 and the Dow Jones to new records. We often talk about the importance of not overreacting to market declines. This is the reason why. We can't predict how markets will perform after a shock, but the biggest market days often come shortly after a pullback. Calmly assessing the situation and avoiding emotional responses is a smart strategy for long-term investors. Okay, let's talk about some of last month's economic events. The Federal Reserve held another open market committee meeting at the end of July and voted to keep rates steady. Now, the Fed's decision wasn't surprising, and now the debate is on over whether or not central bankers will raise rates at all this year. However, investors were surprised at the end of the month by a low first estimate of second quarter economic growth. The first official measure of second quarter gross domestic product showed that the economy grew just 1.2% over the previous 12 months after growing only 1.1% in the first quarter. This came as a big shock, as economists had expected to see over 2% growth last quarter. Now, over the past few years, the economy has set a pattern of slowing down in the first quarter and then roaring back in the second. Though we'll see several more official revisions of the GDP growth estimate, 2 quarters of slowing is concerning. However, looking at the data, we see that a drop in business inventories ate away at growth. Now, economists expect this to actually boost economic growth in the remainder of the year as businesses rebuild their stockpiles. Consumer spending was the biggest driver of economic growth last quarter. Now, this is a great sign for the economy. A strong labor market, rising home prices, and wage gains all support additional consumer spending this year. The Federal Reserve took the GDP report in stride, stating that they believe near-term risks have diminished. We can take this to mean that they want markets to prepare for a possible rate hike later this year or early next. So what can investors expect in the coming weeks? First of all, volatility will continue because uncertainty always lies ahead. Overall, economic fundamentals in the U.S. are looking solid. However, turmoil overseas, a presidential election, and anticipation of a future interest rate hike will likely affect market movements. As always, we'll keep you informed. That's it for this month's educational economic update. Again, this is Rick Odell with Odell Capital Management, signing off for the month of August 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 937-393-3154. We'd be happy to talk to you. Take care.